Have you ever heard the saying, too much of a good thing can be bad? That's exactly what's playing out right now in Ghana's real estate sector. You think a strong currency would help everyone, right? Well, let me break down why that's not always the case. In 2025, Ghana's Cedi has gotten a serious upgrade. Thanks to some smart moves from the government, more foreign currency flowing in, and better economic stability, the Cedi is now flexing its muscles against the US dollar and other big currencies. On paper, this sounds great. Cheaper imports, less inflation, and a nice boost to the national mood. But if you take a closer look at Ghana's real estate scene, things aren't as rosy as you'd expect. Here's the twist. You'd think a stronger Cedi would make it cheaper to build houses, right? After all, imported materials cost less. That should mean more construction, more jobs, and maybe even lower house prices. But what's actually happening is pretty much the opposite. The market's slowing down, investment is dipping. Why? First, let's talk about how properties are priced. In Ghana, especially for the fancy homes and big office spaces, prices are usually set in US dollars. So if you're a local buyer earning cedis and suddenly the Cedi gets stronger, the amount of cedis you need to match those dollar prices goes up. That means homes are actually becoming less affordable for people here, not more. Demand from local buyers? Down. Now, what about foreign investors? You'd think they'd love a stable, strong currency. But here's the catch. When they try to take their profits back home, that stronger Cedi means they end up with fewer dollars, euros, or pounds. Not exactly a win for them, and that's making Ghana less attractive to international investors. And just because imported cement or steel is a little cheaper, doesn't mean developers can lower prices. Why? High interest rates and tricky regulations are still getting in the way. The overall cost to build is still high, so don't expect a flood of new, cheaper homes just yet. Let's not forget the rental market. A lot of rents are pegged to the US dollar too. So as the Cedi gains strength, rent gets more expensive for locals. Some buildings are seeing more empty apartments than ever. So, what's next? Some developers are thinking about switching to Cedi-based pricing to help local buyers, but change is slow. Nobody wants to get caught out if the Cedi swings the other way. Many are waiting to see if the government will step in with new policies to encourage more Cedi transactions and support local demand. At the end of the day, Ghana's strong Cedi is a classic case of be careful what you wish for. It's a great story for the economy as a whole, but for real estate, it's complicated. If Ghana wants to unlock the full benefits of its stronger currency, everyone, from the government to property developers, will need to rethink how the market works. So next time you hear that a stronger currency is always a good thing, just remember, it's not that simple. Thanks for watching, and if you found this breakdown helpful, don't forget to subscribe for more stories that go beyond the headlines.